Hi, Jobin. Welcome to the show.
Thank you, Sarah. Thanks for having me.
Yeah. Well, I'm excited for you to join us as we're talking about profits in practice for physicians. And
Yeah,
for our physician listeners, why don't you share a little bit about your background and maybe how we got connected?
yeah, happy to do so. I've been in the banking business or banking profession for nearly 20 years. And having been in commercial banking, retail banking, private wealth, credit, so the whole
Done it
gambit of
all.
the business side. I've spent most of my career I've spent now in private banking, where I work with individual folks who are successful or certainly on that trajectory towards success, entrepreneurs, business owners, physicians, obviously, to help them sort of navigate as their business grows, what that looks for them personally, what that looks like for them from a business point of view, structuring complex financial decisions, whether that's do I need to sell, do I continue on, do I merge, do I acquire? So I play the role of a strategic financial advisor, and help them with those decision making process. So we've met through a mutual contact of ours, and I think when we met, you had all the recipe that I feel. I was like, I think I want to know Sarah better, and I was like, so I think we sort of hit it off, and and was excited to hear. I was like, hey, I do this podcast and specifically targeted physicians to help them. I said, well, funny you should say that. First Horizon has been in business for over 160 years. And for the past 25 plus years, we've had a medical practitioners program, specifically through the private bank. So there's a lot of value that we bring to the table from that point of view. A lot of good data and a lot of smart people who can help. So it was a good meeting, and I'm glad that I'm here today spending time with you.
Absolutely. And First Horizon is a great partner for a lot of our physicians. I'll admit, I did not appreciate bankers at all until I went out and started working with small businesses. I came from a very corporate background and my paycheck always showed up on time. I didn't have to worry about any of these things. And so when I jumped into the smaller business space or, really independent entrepreneurs, I really quickly learned the value of having a good banking relationship. And I'm always encouraging our clients, you want someone that you can actually pick up the phone and talk to someone. You don't necessarily have to call 3 or 4 1-800 numbers or, all of that. You want someone who is easy to access because it's your money, but also, like you said, that trusted business advisor. I think between the two of us, we can talk a lot about war stories of things that did not turn out well for people. And, we build on that to say, okay, I know that sounds like a good idea, but let me give you 3 instances where that turned out bad. And, we both kind of have that shared experience across clients to really help advise them.
Yeah, yeah.
Well, talking about private medical practices, what are some, I'm seeing right now in this space, physicians, independent practices, either trying to acquire other practices or maybe they're looking at adding a new technology to their practice, that's a big capital expense, or maybe even bringing on another physician. What are you seeing in the space and, how does First Horizon kind of tailor to that?
Yeah. So I think that's sort of the impetus for any business, especially in that arena. And I'll start by talking about what options are really out there. And the great news is there's a lot of options now because of the need of what physicians do, and then I'm sure we'll get into the weeds of that here throughout our conversation. From a just the most basic perspective of as far as what options are out there, there are lots of different term options that are available that typically many banks create themselves. Additionally, there is always SBA, right? Like there's always that fall, and those are good loans that banks obviously want to hold on to. SBA is obviously excited about. They tend to offer a lower down payment option with longer repayment. Of course, that's where you have to. So we have to decide through that process, like, okay, what Is interest rate more important to you, or the payment structure more important to you? What is it that's important to you, so that not for the business to sustain? Healthcare specifically, many banks, including First Horizon, we have a specific line of business for that, to be able to offer, whether that's owner occupied real estate loans, equipment loans, lines of credit for reimbursements. As we know, there is usually a 90 to 120 day
The
lag.
existence. Yes.
That's right. So it takes a little bit of time for that payout to come. So there are lines that we can set up to help the business continue to flow through. Equipment financing. So for context, if you take, I took some data from Magna, the Medical Group Management Association. So for them, when you look at their data, and when I looked at some internal data, if you're looking for a EMR system for a multi-physician, on average, it's $162,000, right? Like, that's just sort of the basics.
Yeah.
So you're going to have to do that. And what does that financing look like? Or if you are part of already a physician's group, when we think of the local, like Baylor Scott and White, for example, or a larger physician group, if you're looking to buy units to have equity position, there are ways to finance that. And a lot of doctors who learn through that process, we help them through that. So doctors have more financing tools available than ever, from SBA to specialized healthcare's lines of credit. Yeah.
Absolutely. And I think it's smart to consider, I think when you talked about the needs, is it a low interest rate? Is it manageable, smaller payment? What is it? I think there's some different structures for different types of things. There's not, you have to be always in a term loan, or you have to do this.
Right.
I think we can, I definitely have fatalist thinking sometimes of like, whatever decision I make today, it has to be forever. And, with the relationships and some banking options, I think there's a lot of different structures, and you can always restructure. You don't want to restructure every 12 months, but it
Right.
is, you can look out in a few years, and if something's not working for you, there's definitely a conversation to be had. And that's where bankers and myself, we're collaborating and working with that to say, okay, the business has changed. It's bigger, or it's smaller, or, whatever that is, that collaboration piece.
Yeah, it sort of goes back to your original comment that you made. If you are a small business, there are certain lifeline, sort of like the organs in your body, to kind of, make the correlation to our conversation, that are important. Always have a good banker on your side, have a good accountant on your side, have a lawyer on your side, right? Like, these are the people that you need. And I'm Sarah, you could probably have many stories to talk about where, when those things are not in place and the business suffers, and obviously when the business suffers, the small business owner suffers.
One of the things we're starting to see more, I mean, it's been active for quite a few years, and is the private equity space and their partnership and their desire to get into private medical practices. I've gone through due diligence several times, and sometimes we've completed a deal, and sometimes we've put the brakes on it and said, oh, this isn't a good fit for a variety of reasons. What are you seeing from your side of the table?
Yeah, so private equity has transformed physician practice market. There's no way around that. That is true. 10 years ago, 15 years ago, that wasn't really the case. I know my own story with my primary care physician, who ran his own little shop, and now he's part of I think 55 or 60 member group, which is part of a roll up. And I get the attraction, right? They bring capital, they bring consolidated operations, they offer improved efficiencies most of the time. But physicians often have to give up autonomy, I think, in exchange for liquidity, right? Like, that's kind of the things that you have to kind of think about and look at. From a banking perspective, underwriting criteria have shifted. What we are looking, where it used to be where we were underwriting the business or the physicians, we're establishing evaluated practices and guidelines in place, where not only are we underwriting the business, but we're also underwriting the PE backed, which is usually part of some sort of a roll up model. So we're also underwriting that. So those are some of the things that we are seeing. It was kind of interesting to me. I was pulling some information from within the bank and just kind of looked at some other data that I had. So, and I was kind of floored. As a banker, you don't really think about it because you're just working one-on-one with the client. So it turns out about 65% of dermatology practice now in the US is PE backed. That's a big number. And that number is only increasing. And there are other areas where that number that you're seeing that. So yeah, private equity is reshaping medicine. I mean, it's weird to even say that, but they are reshaping, because you're getting cash up front, and I can see the appeal on that. Where I think physicians have to think about is how much of your autonomy and independence do you want to give up? I think that's going to be the question that they'll have to answer for themselves.
Yeah. And it was definitely a key question. I think the second part to that is, how much longer are you planning to practice? If you're a fairly new physician, is
Yes.
this part of your overall wealth strategy, or is this part of your retirement plan? So I think there's definitely, yes, the autonomy of practicing medicine is number one, but then looking at the arc of your entrepreneurship journey and where you see yourself in that, I think is a critical piece too.
Yeah, great point. And one of the things that that reminded me of just now was actually someone who was in my family who was a physician. And when I talked to her, her exit strategy was her kids, so my cousins essentially, they were in med school. And her plan was, I'm just going to give it to the kids. They're going to take over. As I got to know them, the kids had no interest. They had no interest. They just didn't know how to verbalize that because they didn't want to disappoint their parents, obviously. So yeah, that is part of a really important thing that you'll have to think about. It's say, hey, is this not only how does the business sustain, but how do you think about your exit strategy? Because the last thing that you want to do is put the amount of work that you've done for 20, 30 years plus, and then you just shut down.
Yeah, absolutely.
You've given up the biggest equity probably that you have at that point.
Well, I think succession planning is great in all industries. My husband and I both own our own practices, and I don't think we're growing any attorneys or accountants, but you never know.
Yeah.
Kind of talking about the banking, we talked a little bit about private equity, and you talked about the efficiencies that they bring in.
Yeah.
And sometimes I really challenge our physicians to think about, okay, instead of taking private equity money, what would it take for you to implement some of this yourself, right? Like, could you work with a banker on a line of credit? Or, I always flip it around. If I was private equity, this is what I would do to your practice. From a banking perspective, are there any KPIs that you are looking at when you're evaluating a practice's health or financial well-being?
Yeah. I'm off that belief system. If that anything in this world is learnable or teachable. And so this is no different, right? These are just metrics that I recognize that from the time that you were in your early 20s and all the way getting into your 30s and 40s, medicine is what's drilled into you. But just basic things that you can absolutely pay close attention to. And this is where partnering with your CPA makes a huge difference because, they live and dream and probably count that on a regular basis.
I don't talk about I dream in scorecards. Okay. I have a set KPI of like what each day is going to look like. So yes, we do, sadly.
It is absolutely the key. So, I think the biggest thing is start with meaningful partnerships, right? This is probably the most important thing. Financials are something that you should not be scared of. Yes, there's a lot of numbers on there, but there's very few things that you kind of need to know. And then the rest is just asking meaningful questions. I think for any business as they're looking to grow, focus on your margin. I think that's probably a key metrics. Like from a private equity, going back to private equity, that's the first thing that they focus on. They focus on their margin. Like when they're looking at these firms or hospital networks or physician networks that are being set up, they're looking, do they have 15 to 25% in EBITDA margin? You don't need to calculate EBITDA, by the way. You can ask your CPA to do that. They will do it. I'm sure Sarah will
We'll
do it for
do
you.
it. We'll do it.
So I think that's probably the most common thing. It is the most common metric that's used in banking when it comes to lending, is EBITDA margins. It's a very simple calculation that can give you kind of an idea where you stand. Additionally, what type of debt are you taking on? Are you taking on short-term debt? Are you taking on long-term debt? One of the common mistakes that I see that can be very, very helpful when it comes to real estate is a physician, and I'm going to use you, Sarah, right now as my doctor.
Perfect.
Dr. Webb is practicing and doing really well and has a fantastic practice. But she's leasing, right? Like she's leasing her current property where she's at. She's in a position now where she's maybe has a first right of refusal or finds a better location, right? That's the goal of every business: location, location, location. And she'll buy that practice or that location to be able to start practicing from there. I see this so many times, and unfortunately, sometimes I see this after the fact. They'll buy that business or that real estate under the same business as the practicing of the actual business, right? Which is a mistake. And I know I'm not here to give advice, but just kind of this is very common that I see. Here's why you should probably not do something like that. It's a matter of liability. You want to separate that out. In the event, if Dr. Webb here gets sued, now that real estate is part of that lawsuit, right? And again, going back to my comment, have a banker, an attorney, and a CPA on your side at all times. It's very common that you see, and I get it, like, oh, it's the business, right? But you can umbrella that. There's so many different ways to do that. And you want to keep that separate because technically that's a separate asset has its own equity value and things like that. So if you're in a position one day to sell your business, you're selling the business. Maybe the real estate is not part of it because you're selling your charts essentially. And that could be a separate transaction. So I think just really having those partnerships in place is really, really important. Asking those meaningful questions like, hey, how should I structure this? So not everything needs to be under the same business that you're practicing under. It can be under something else. So I think those are some of the things that we take a look at from a calculation point of view. Debt service coverage. Most banks look at, 1.25 to is sort of like the benchmark. So for every dollar outstanding in debt that you've got $1.25 to cover it, or higher. I say higher is always good, right? But those are some of the main things. And, you don't have to be a financial genius or anything like that to figure that out. These are very simple things. Most CPAs will do a great job of just sort of explaining that and, kind of teaching, because I know that you have a passion for teaching, Sarah. So like you could teach that, right? And you'll probably happily do that. So I think those are the things that we really pay close attention to. And experience will naturally take over time where you're asking now all the right questions.
And going back to the building, we have in one of our podcasts, we have a tax specialist, Chris O'Shell, and we go through like putting different things in different legal entities. And in addition to not putting the real estate in your practice, most of the time your practice is an S corp, and real estate in S corp is not a good move for a variety of reasons. So we dive into that a little bit further in the tax one. So if you haven't listened to that one, go get that one. Earlier you had mentioned, I am surprised that 65% of dermatology is rolled up on PE. Are there any other trends that you're seeing with specialties?
Yeah, we are actually. And, I spent some time with our group here internally, just gathering data. And where we're seeing a big lift where PEs are starting to target, right? orthopedics. That's another area that we see. Cardiology. Those, so along with dermatology, are the most targeted industries right now by PE groups. I think that's where you're seeing a lot of lift. Where we're starting to see an uptick also is surgical centers. Primary care practices, they're starting to consolidate also. I gave you the example of my doctor, who was standalone, and now, it's part of a much bigger system. So I think that's where we see the consolidation model. And a lot of that we're seeing, and what I'm seeing, is because it's value driven. I think that's where the key is. It is value driven. I was doing some research on this, and I found that by 2030, right, which is 5 years from now, in the United States, medicine is going to be a $6.8 trillion business. That's
our
a
largest
massive
industry, right?
It is our
It's
largest
it's the
industry.
it's bigger than some countries' GDP. I mean,
And it's funny
healthcare
you
is a
said that.
business in the United States.
I put on my economics hat, and I did the work and figured out. So if you take that, that is actually bigger than the total GDP of India and Great Britain combined, which are the fifth and the sixth largest economies in the world, right? So
Yes.
it is a big industry. Obviously, PEs are seeing value in it. It's I hate to bring up the past, but also practicing medicine, it's not like it was before, right? As physicians, it used to be like, hey, I just want to take care of my patients, and that's the end of it. You do need to have some level of savviness, to be able to just ask the right questions. Even if you don't understand or know finance, you have to have people around you to be able to ask the right questions. Just because again, it is the largest industry, and it's only getting bigger. So we are seeing a huge tick in that direction.
Absolutely. And I have no shame in not understanding a lot of things. And so if I'm confused, I'm like, you need to explain this to me like I'm a kindergartner, and I need to be able to repeat it to someone else. And so, specifically with physicians, this is your financial future in a lot of these things. And I think, if someone can't, I guess my point of view, it's hot opinion, I suppose. If someone cannot explain it to me at kindergarten level, they're trying to sell me something and kind of pull a fast one on me. Like, they need to be such an expert in what they're doing that they can give it to me down in the basic building blocks of what's happening.
Yeah, and it's so important to be able to ask those questions, and I think, and I'm just taking my friends and clients that I work with. They think that, oh well, that's doesn't really apply to me. Kind of is sort of the conversation. And the reality is that there's so many different pressures coming in everyone's direction. There is the pressure of living a certain lifestyle, right? Whether that's the pressure from your own spouse, or your own friends, right? Like birds of a feather flock together. Chances are you're hanging out with other physicians and doctors, right? So there is that pressure. So, these roll-ups and these kind of financial decisions are being made. In 2012, 60% of the practices, primary care practices, were owned by individuals. We're roughly around 45% now. So, 55% of these are owned now by private equity, or some sort of a larger roll-up. So this is going to happen. It's happening. And I guess the decision really that you have to make is, okay, if I choose to be independent, what sort of guardrails do I need to be able to put up where I can provide that level of service to my patients? Or do I do what is important financially for me or my family or whatever that looks like, and I'm going to make that sale happen? If that is the case, then you need to be able to ask these right questions. And part of that is just being able to explain things at a very basic level and then working your way up.
And when you talk about this roll-up happening, and what have you seen as some pitfalls, some financial minefields, if you will, of what's happening in some of those cases that maybe didn't turn out as well as the physician was expecting?
Yeah, so I'll start with the premise of not asking the right questions, right? I think it goes back to, look, I'll admit this too, right? Like as a financial professional, when I'm sitting in certain conversations, which is out of my depth, I pretend like I know. and that's not the best, it's my ego kicking in, right? And I'll admit to it. But
Know thyself.
asking,
That's the first rule. So
that's
you're
right,
on the
know
road to
thyself, right? Like
recovery.
self-awareness is really important. I think not asking the right questions always kind of hits them. A lot of the times that we're seeing, in what I'm seeing, when we are looking at, when a lucrative deal is sort of presented to them, or things like that, where they don't necessarily understand, what an earnout is, for example, right? What is an earnout, right? No one's like the follow up question should be, what is an earnout? And if the person across the table can't explain it to you, then you probably need to ask a lot more questions at that point. So not really understanding how the compensation changes for you, because you're technically working for someone now, right? And so how does that compensation work? How do earnouts work? What happens if we don't hit target? When you're thinking about from a private equity perspective, it's about hitting targets. Otherwise, because they're involved in leverage buyouts, right? So their goal is to maximize the amount of equity, and not just that, to be able to find those margins, because they have to also please their investors to be able to make sense of the investment that, let's say, if someone else is making into this private equity. So really asking those questions. The biggest challenge that I see is them not realizing this is not your business anymore. And there is a model, right? This is it's sort of like that old school saying, well, this is how we do it around this part of the country. This is how they do, and you better get on board. And that's really important to understand. Really understanding your structure, your responsibility. I encourage a lot of physicians, get this stuff in writing, right? Like this is where a lawyer comes in handy.
It doesn't, if
Uh,
it doesn't happen in writing, to me, it doesn't happen. Like, maybe that's, being married to an attorney, but I'm like, if it's not written down, it is not document. You can tell me what you want, but it's got to be written down.
right. 100%, right? Engage an attorney. Being able to represent you. This is probably one of the biggest financial decisions of your life post, education. So you need to make sure that you understand what is being asked of you, what your compensation structure looks like, what are the metrics that you need to get to. When you get to those metrics, how does the earnout look like? What can potentially, even with an earnout built in, there are triggers that can be activated where you don't get the earnout. And what do those look like? Is that something, the great thing about negotiating a contract is everything is up for debate. So you can absolutely have those conversations. And I think it's really important to have those conversations, asking those right questions, and understanding those basic things, because we're already in a scenario where 74% of physicians now are employed by a hospital or a corporate entity. So, and that number is growing. And a lot of that is young physicians, right? Like they're coming out of med school, finish their residency, and they're kind of going into this mode. So need to understand that. So if you're part of that 24%, at some point, someone's going to want to buy your business. So which means you're a hot commodity, right? You're doing something against the grain. So understanding what your multiples look like, and is it value? Is there value there? So when you get there, and I want to add this is really important, is hire somebody who can do valuations for you, right? Like when you're working with a CPA, they can give you a lot of really good content, but having someone who can do valuations for you, and there's a lot of great options out there, and you want to make sure you understand what is the current multiple. Are you getting a fair shake of that company that you're looking at, or that practice that you're looking to sell? So I think those are things that really need to be looked at before you sign on that dotted line.
And I would add slow down. I think a lot of times we're, as business owners, I mean, I find myself, if PE came and wanted to buy my accounting firm, which they can email me. I would be so excited, right? I would be flattered that someone wants to be in this business model. And I think they build on that a little bit because they can move really quickly, because they've done this time and time again. I mean, they have a playbook of how to make this happen. And I think, talking about your ego, like it is great. Like it's amazing that someone wants to buy you. And they may have a high desire to move a lot faster. And because they're moving faster and you're going to do this once, maybe twice. They do this hundreds of times a year. And so, they are the experts. And so I would say pumping the brakes on this and like telling them I've got to get my advisors. And if they're that interested in you, which they likely are, they can slow down to your speed. I think, we do get the like, oh, it's got to make this happen. We've got to get this done in this calendar year. You're going to be just as valuable next year. I don't see anything right now on the horizon that would require someone to get something done here in this calendar year versus waiting till the first quarter of next year.
Yeah, Sarah, great point. Like, I think that's the, slow down. And the point that you made, they have a playbook and they've ran it 100 times. They can probably do it in their sleep. So just, think of this now that we're in football season, think of this Alabama playing. Well, maybe it's not a good example.
I feel like we need to use a different example.
Maybe, let's call it traditional Alabama, right? Traditional Alabama paying a junior varsity team, from your local high school. It's not going to be a fair fight. So that's sort of what you're walking into. So slowing down, understanding the playbook of what they have, and really, I encourage people often just write down your priorities so that if you feel like you're getting caught up in all of the conversations, you can always take a step back and look at what's important to me. What is it that I need to accomplish out of this? And as long as you're saying you're staying on target for that, you should be in a really good position. So slow down. Yes, 100% agree with that.
Well, and also be prepared that the due diligence process takes a long time. They're going to ask you for every scrap of paper that you've ever had. So I do actually have a due diligence checklist. I'll put it in the show notes. I think it's great to find these documents now, even if you don't think, oh, I will ever sell to PE. You need to know where your operating agreement is. You need a copy of all your contracts that you have with payers. I mean, those are just good business practices to have, but when they start their process of evaluating you, they ask you for a lot of information. And if you're not a good record keeper, some physicians are great record keepers. I know that with the EMR, you have a tendency to like understand that, but keeping those business records are it's a different ballgame. So, getting ready for that even now and being prepared now can be beneficial as well.
Yeah.
Well, let's kind of shift a little bit. Let's talk about personal wealth. Are there any recommendations, whether a physician goes, the PE route, they stay independent? What are some tips and insights you have on just building personal wealth from a physician standpoint?
All right. So I think this might be the part of the podcast where I get on my soapbox and start playing my violin. This is like really close to me. This is very, very close to me. So I want to dispel this myth that somehow when you make a lot more money, that you're somehow financially more sound. That could not be further from the truth. I'll share a personal story. My first job in banking, when I was in college, I got a part-time job in banking.
We're a baby banker. Yeah.
I had no idea. I just knew that I wanted to do something in finance, and wanted to, I grew up right here in Fort Worth. And so I was thinking about like, okay, what do I want to do? It's not like I can, I don't live in New York, or Shanghai or anything like that, the financial global centers around the world. So I'm in Fort Worth. So I did what anyone would do, just applied for a bunch of banking jobs and landed a part-time job as as a teller, and I will tell you, looking back and where I'm at in my life, I'm grateful for my career and what I've been able to accomplish. I was making $10 an hour as a part-time teller. Never been more happier in my life. It's just because it goes back to that. The more you make, there's that financial pressure of wanting to live up to that lifestyle. And so on average, physicians make about $350,000 annually. That's sort of the average landscape. Here's the funny part about that. So when you look at early career doctors, they have less than $50,000 in savings. So that's you're in your 30-ish. What you call, we sort of refer that to under accumulators of wealth. That's sort of how we sort of refer to them. And you're already in a scenario to begin with where your ROI is significantly less than what a banker or a lawyer would do, just because of the amount of years that you've had to go through med school and getting into residency and so on. So there is a significant cost that you've put up on the front end to be able to be a doctor, to be able to take care of people. So what happens is when you get out and you see that first great, big, nice paycheck, you just feel like life is awesome, right? Like you're
got to go buy a car.
Exactly.
What you do is you go out and you buy a car. It happens almost 95% of the time.
Exactly. And you're in an industry where people want to, you want to be in because there is a high demand for what you're doing. So you don't necessarily understand that notion of like, okay, how do you treat yourself as a business? And I've had these conversations with athletes. Those are they're probably the biggest offenders of this, where you're really not focused on treating that, let's call it $350,000 in this example, as your top line revenue and not the bottom line revenue, right? That there's a lot of expenses from that 350. Student loans, that new $1 million house that you just bought, that BMW or Mercedes or Porsche that you decided to go buy. So there's a lot of other additional expenses that you've added on that you're not necessarily calculating for, but because you're in the industry that you're in and you're already, in heading toward, the top 3% of income earners right off the bat, you're not necessarily calculating for that. Why am I saying all this? My advice: get you a financial planner, right? Like, so important. I have sat in and I still do this. I don't do it as often. I will admit, where I let our team members run with it because they do it on a regular basis. But just so that I get some context on where people are, because sometimes, you can find yourself in a position not necessarily understanding what's going on around you. And the best thing to do at that point is go back and sit in on those conversations. I was actually in a conversation about 2.5 weeks ago with a young couple. They're in their early 30s. The husband is a physician, and I think, and the wife, she was in the insurance business, and I started reminding myself and how important some of the questions that they were asking, and just realizing, like, these are smart people, right? Like, you don't get to where you get without not being smart. But I realized, like, how much of privilege I have in knowing all of this information, and I maybe take it for granted, right? And I think it's so important that you find those financial partners around you, because it is not just their job, but it's part of their duty. Like, the duty of care extends in our industry. Fiduciary responsibility, where they ask all these questions. And they're asking because they're trying to do essentially a financial checkup on you. Do you understand this? And why I bring that couple up is because they were in the middle of buying a car, in a very nice car, looked beautiful, fantastic. And they realized that they just needed to wait 2 more years to be able to do that. And I realized in that moment, I was like, my God, they're doing really well in life. But it's got nothing to do with the amount of money that you're making. You could be making $10 an hour, right? It's just understanding uh, how money really works and how it really, really moves. We see that roughly about 93% of physicians who actually engage financial professionals, they're set for retirement. On the other side, it's about 54%, where they've never really engaged anybody. They're kind of putting money. They may or may not put money away, but they're just levered up. They're buying the house, remodeling the house, living up to the dreams of the Joneses, right? So I think that's where I really have a lot of passion, and that's part of the reason why I sit in on some of these conversations, because I just want to hear okay, do people still have the same challenges that I was sitting down and having conversations with these same folks 15, 20 years ago when I got started, right? And the reality is, yes, it hasn't really changed. So important. And I realize I've probably talked about this for about 10 minutes now, but I could probably talk on forever. But
Well, and
it's
I get a financial checkup each year, and I consider myself a very savvy investor and very knowledgeable and very on top of it. I mean, I do QuickBooks for my personal self, so I really know where everything goes, and I still reach out to a professional, and my husband and I meet with them at least annually to review where we are.
yeah,
Part of it is, because I am so close to it, I want a third party opinion. There's always someone smarter than me, and I'm thinking about this harebrained idea, and they're like, let's not do that. And the other part is, I think, I don't know the statistic, but having those meetings with your spouse is, you're setting yourself up for a multiple of success if you're on the same page. And so, I meet with my financial advisor at least annually, sometimes twice a year. So
yeah.
I think it's a good practice for all of us.
Agree. And Sarah, I'm no different, right? And I think maybe that's the thing. I'm in this business. I understand everything from how to do a private placement to balancing your checkbook, right? It's a gambit. But I meet with my financial advisor. I meet with her at least twice a year, and it's just basic stuff like where am I, where am I going? Are we on track? And that's it. It's just covering three things, right? And her job is to just keep me off the ledge when I decide, hey, I found this really great fund. I feel like we should look at it. And I'm like, no, we're not doing that. I was like, oh, okay. So it's really that. So I think it's so important to do that. When you are a professional at the highest of your game, right? Like when you are a physician, you're the best of the best, right? You're so focused on what you're delivering to your patients on a regular basis, it's natural to neglect yourself. It's all of us do it. It's just how it is. And I've met bankers who are in financial hardship and you were never, oh my God, how? You're like my
Better.
idol.
Yeah.
Yeah, and it happens to all of us. But it's so important in finding those moments where you take a step back and you become the student again, and let someone else lead and teach you. Like, hey, look, this was the plan. We're sticking to the plan. The plan's working. And if you have some excess cash or play money, go do whatever you want with that, right? But we're not messing with what is important here. So important to have these discussions. And in my own practice, I've seen firsthand clients who are physicians who have those regular meetings with you. It doesn't have to be anything formal. Go grab lunch with them. Go grab coffee. It doesn't have to be like, oh, I got to take the day off. Like we all have to eat and we all work probably long hours. So go grab some coffee with them it doesn't have to be sitting down and form, because once you get to know these folks, it's a relationship. So I very much encourage that. So important. Like I said, if you want to talk more about it, I will spill my entire guts out when it comes to financial planning and how important it is.
Yeah. Well, I think that's a good point as we're kind of wrapping up. How can listeners connect with you or learn more about what you're doing?
Yeah. I'm very accessible. Feel free to email me, and Sarah, I can, share my email address with you.
Put that in the show notes. We'll put your LinkedIn contact in, and that's a great way to reach out to you as well.
Absolutely. LinkedIn is a great way to reach out, just to have these discussions. Happy to do it. You get to a point where when you're much younger in your life, it's like, I want to do more business. We all do. We always, but that shift happens where it's like, hey, I want to leave something of value behind. So if you just want to just have a chat or just a checkup, hey, here's what I'm doing, I'm happy to do it. There's often that misunderstanding that since I'm not doing any business with you, I can't really ask you any questions. I'm not charging you by the hour.
I was like, you drink coffee too. You eat lunch, right?
That's right. I need coffee too. I've got long days, so I've got. So happy to connect, whether it's over coffee or over lunch or
Zoom, telephone. We've got all the ways.
So there's different ways, and happy to connect. Anyone that would want to just chat more about it.
Thanks for joining me on Profits in Practice. If you found today's episode helpful, be sure to subscribe, leave a review, and share it with a fellow physician. Your financial wellness is just as important as your patient's health, and we're here to help you thrive. Connect with us via our website at webcfo.com. Thanks for joining us.